We are getting very quickly to the end of the year. During the week, Fed will give their rate decision. We will have the jobless claim numbers on Thursday as normal. We will have some PCE numbers and some court results. You're listening to the StockInvest.us podcast, Trading Tips with Jim. And if you haven't liked the video yet, do it and subscribe so you can follow the market. Last week I told you I didn't expect much from the market at all. Nasdaq barely made it to a plus, up 0.34% for Nasdaq, ending the week at 19,927, and my bet for 20,000 by New Year seems to be within reach. Dow Jones did not do good at all, almost down 2% for Dow Jones, ending the week at 43,828 points after falling 1.83% to be exact. And the upturn in the market was mainly driven by a few companies. Tesla been doing very good lately, and it was again the bigger tech 7 companies doing the market upturn. This week, I believe it's a fair chance we will have a green week. Last week I told you I thought it would be a red week. I think that was the conclusion I made, and I argued for why, things being in the upper part of the trend, overbought, etc. But I think we will be back on the green streak again this week. First, a few things about what we can expect for the week ahead of us. Today, on the Monday, there will not be much news. Same for tomorrow. On Wednesday, we will have Fed's rate decision, and that will, in my opinion, make the market move somewhat. Everyone is expected a 0.25% cut in the interest rates. That is the expectations, and there is no reason why it should be more. Actually, there is a slight reason why it should be less. But given the pressure on Fed, I think they will stay to the 0.25. So I am among the consensus for the rate cut. That means that the market will not react much on the number itself. It will be more what Fed will say about interest rates moving forward, and the expectations are now that for 2025 only 2 rate cuts to be made in 2025. This is because there is a more sticky inflation than expected, and Fed is expected to reiterate this, saying the same thing, that the inflation numbers are still too high, above the 2% target, and they don't want to push too fast. We will see how that will play out. My bet is still for stagflation. I hold a button on that one. Thursday there will be jobless claim numbers. Last week they did not come in as expected, and this week the jobless claims are expected to come in at 242. So we have Fed on Wednesday, probably will move the market, I think so, and then it will be Thursday and Friday where we will have the jobless claims numbers and the PCE, core PCE numbers on Friday. This makes for what I believe maybe a steady Monday, Tuesday. We will have some shift in the markets given the Fed expectation. Can be, I think it's a high likelihood that we'll just see a very green market after Fed come with their speak. I think we can easily see Nasdaq up 2%. Will be very interesting to see. Thursday may be backing down a little bit. We will have some GDP numbers on Thursday as well, not only jobless numbers but GDP numbers as well, expected to be 2.8%, by the way. That can continue to fuel the market, and Friday we'll have core PC numbers, which I think maybe will cool the market. So if to just take a qualified guess what will happen, I think there will be a slow Monday, Tuesday, can even be a slight upturn, but I do not expect very much. Wednesday I think can start slowly and then push upwards after Fed has announced their rate decision. Thursday I think might just continue in the same good claim, and Friday might even tick back a little bit, but everything indicates to me that we might have a very good week ahead. Things can be turned upside down. Of course, there can be additional news in the world causing markets to hammock. Some of these numbers can come in on the totally wrong direction, but it's hard to believe. So there is always a chance. But that is my bet, that we will end in a good green for the week ahead of us. Friday might be red. So there will be some quarter results, and the first one will be, which is of some important, will be on Wednesday when General Mills will come with their numbers. Very interesting to see a little bit about consumer behavior. We're getting to the end of this period. My assumption always been that we will see a squeeze in consumer spendings, etc. We will see a shift, how consumer will shift their behavior. All of these things happen. And I think we can see some tracks in General Mills numbers, but in general the trends are already established, so not much to get from it. If you are to speculate in General Mills movements on Wednesday, we have figured out that there will be a minimum of plus minus 3.5% on the quarter numbers. Then we will have a Micron, maybe Mu, ticker MU, maybe more interesting for people. For some people, expected move here is 4%. Thursday there will be maybe a little bit more interesting companies, I would say. We will have BlackBerry, for those who remember the good old BlackBerry. They are expected to move 6.36%. And if you rewind back to last week's podcast, where I also gave you a few quarter results and the expected swing, you saw that some of them did exactly what I said. And if you were able to get the right direction, well, then you were in for a hefty move. Anyway, BlackBerry is expected to move 6.36% minimum, plus minus this, during the day of the quarter results. CarMax will also come, 7% is expected here. We will have FedEx, not so much, 3.2% expected movement, and Nike will also come. Only 2.45% of our systems believe Nike will move in either direction based on the quarter results. We will see when the results are in. Very interesting anyway. So for the heavy swingers, we have BlackBerry for sure and CarMax, both close to 7%. On Thursday we will have Carnival Cruise Line for those who are interested in cruising industry, 6.24 expected move for Carnival. So we can see there is not much quarter results left, and I don't get any much interesting data out of this. What I expect, what we have seen over the last quarter results, are that the profit margins are squeezed. They are getting heavier to achieve, and that is because the prices has been offset on the customer as much as possible. Then you have to take on your, the business has to take on their own profit levels. I expect to see somewhat the same and somewhat the same statements during these quarter results. The statements are the most important thing in my opinion, because the quarter results is the numbers are in, you cannot change these. More importantly is what the CEO and the CEOs of the companies say about the future. What else is there to mention about the week ahead? Not so much, actually. That's more or less it. Still argues for what I believe to be a good week. Oil had a good week last week, up $3 for gold, ending the week at $71, up 4.23% for oil. Gold still holding steady, $2,673 for the gold, up $2, while the 10-year Treasury yield moved up last week by 0.27 points to 4.4% or 6%. We know that when the 10-year Treasury yield goes up, market goes down, so that was obvious last week. Now everyone is just trying to position where Fed will be. What about the long-term interest rate? So that is the 10-year Treasury yield. Quickly about signals. Before I will give you a few stock tips at the very end of the podcast. Getting very fast to the end of the podcast. I will give you some stock tips this week. And of course we'll look at the $1,000 challenge. Reminder again, if you haven't liked the video, if you like it by the way, make sure to like it and subscribe so you can follow the new podcasts when they get out. Usually every single Monday. Pre-warning, this will be the last podcast before Christmas. I will have a longer break off. We'll only be back on the new year. What does the signal say? Well, the buy and sell signals, they say that across all the tickers that we analyze, some 40,000 plus tickers, 33% are giving buy signals, down from the very high 39% last week. Nasdaq is down at 16. Every time it gets this low, usually offers a buy opportunity. Last time it was a really good buy opportunity, was down at 11, but 16 is also considered to be very low. So this argues for what I just said about a possible green week. New York Stock Exchange down from 35 to 28, and I think I read somewhere that for S&P 500 has been 10 straight days where more stocks have fallen than risen, and last time that happened was 2001. Just a small fun fact. New York Stock Exchange, as I said, is down from 35% last week to 28, still somewhat normal. If we go to London, 24% buy signals, Frankfurt 38. There seems to be some better mood in Frankfurt these days. Germany doing very bad, by the way, in terms of growth. Tokyo 31%, Shenzhen China 60%, and National Stock Exchange of India 34%. What does these last numbers say? They say that markets are in somewhat balance. You shouldn't expect there is clear buy signals. Only one with somewhat okay buy signals, in my opinion, is Nasdaq. We do know that numbers are low. They can get very low much faster. It's like overbought and oversold. But statistically, there is a fair chance that Nasdaq goes up. For the rest of the markets, it's expected so. Looking at the chart, we see somewhat the same we saw last week. Nasdaq is in the upper part of the trend, found a pivot top during the week. Relative strength index is moving down. Another argument why things can keep in the upper end. If there will be a huge fallback, the first real support will be around 19,600, and then just above 19,000. So if market starts to react back, can be they will react back on the jobless numbers, whatever there is. These are the support levels. In the longer run, there is expected market to have a correction, but I'm not sure it will come this week, simply because we are in the upper part of the positive trend. Indicates still good times ahead, but that at some point we'll have to react a little bit back, but doesn't look like it for this week. National Stock Exchange of India, the chart says that whatever was looking okay last week looks even better this week. I think we are out of the bad streak on National Stock Exchange of India. I think that we will position ourselves for some growth. Buy signals from the relation between the long-term and the short-term moving average, and buy signals from both of them as well. I think for anyone from India listening, I think that the markets will move upwards over the next few weeks. I told you that I will give you some buy signals, some straight up signals, and here are some signals. If you are a short-term trader, do know that there just have been pushed a buy signal in Cirrus Logic. Cruise is the ticker, CRUS. Is it reliable enough? I don't know, but there is a buy signal for Cirrus Logic. There is another buy signal in First Solar, FSLR, First Solar, a company that's been a lot up and down, but these two companies show short-term buy signals. Here are three companies that have given a little bit longer buy signal. I would say a stronger, longer buy signal. One is Micron, and we know Micron will be out with quarter result numbers on Wednesday, have also given a longer medium to long term buy signal, Micron. Same thing with Teradune, Teradune, and Baidu, BIDU. Baidu. These three companies have given a medium to long-term buy signal, stronger than the short-term, I would say. And here are three companies that have given even stronger buy signal, and we are talking very long term signals that shows and are very reliable when they first appear, but for more long-term investment. iRobot have given a long-term buy signal. ATS Corporation, ATS is the ticker, also given a buy signal, and then a smaller one called 3D Systems, DDD is the ticker, triple D, DDD, have given buy signals. So there you have 8 different companies giving 3 different type of signals. I will round that up while giving you 3 companies which are close to their support level. It's a high chance when the stock is close to the support level that they will bounce up. We are talking again, the more short-term investment may not happen because they may break down. Usually if you want to trade these sort of companies, you will put your stop loss 3% under the support level because you have to expect that it can be broken a little bit and go up. So it's like this number should be tuned by the relative volatility of the stock, how much it can swing during day. You can use ATR or others for this. I'm just giving you a standard number, 3%, easy to remember. But you should have your stop loss 3% under, meaning that you're willing to lose 3%. And we are talking from the support level. And Amat, for instance, has support at $169. This is the support level. There is very little resistance up to 133. So Applied Materials Inc., AMAT, has given a possible buy signal from close to support, meaning the stock is close to support. Fair chance that it may bounce upwards from this level. If broken, can be bad. It's for the more risky trader. Then we have another company, and this time it is a therapeutics company. It's Chimera Therapeutics Inc. Chimera is at the support at $42. If this support holds, it will push up to $46. So 10% here. That support is from previous support levels where stock has bounced up. Each time it's bounced up from this level, it has bounced 10% or more. So Chimera Therapeutics, KYMR, is one company that is close to support. Not the best I've seen. Then another interesting one, MongoDB, MTB. At support level here seems to be more support than at the previous stocks. $267 is the support level at. If broken down, you can expect it to continue downwards. So again, we are just playing the game of trying to bounce up from support. No resistance before $291, so it's a fair chance, especially if markets are somewhat good, that these 3 stocks, Applied Materials, MAT, Chimera Therapeutics, KYMR, and MongoDB, MDB, will push upwards if the support holds. 18 minutes into this last podcast before Christmas. Before getting to the $1,000 challenge, just a slight recap of what went good for me during this year and what have went terribly wrong. What's done very well for me this year has been gold. Such a good investment. Going into gold these few years back at 1,600, I argued for why. I told you to get into gold. Gold currently sitting at $2,673. What a good year gold has been for me and for anyone invested in gold. Yes, I believe gold will continue upwards. Staying in war stocks was a very good choice. Argued so many times why. The other very good thing I did was putting more into dividend stocks, because as I told you, I think that the markets will have some issues. And some months ago, half a year actually, I started to change my positions a little bit, because I thought it would be harder for the average of stocks to do good in the market. Some will do good, but the average will not do as good. And I wanted to be in a position where I could have dividends, maybe not have the best development in the stock price itself, but have very good dividend. Paid so much and so good. And if you're a Norwegian listener, you will recognize some of these companies which I are in and have been in. MPC Container, 2020, Agas are some of the companies where I've been raking very nice dividends during the year. So that was another very good choice of me. And of course, staying in crypto. If you follow this podcast 5 years in a row, you heard me when Bitcoin was down at 30. Buy, because I was buying, I was taking up my crypto reserves, and what a finale it has been at the end of the year for crypto. It's maybe the one thing in my portfolio that has been doing the absolutely best. And watching today's news, I saw that Bitcoin is at $104,000, continuing upwards, setting new records. And I think, given the fact that it broke 100,000, as I spoke about a few weeks ago, it will push very fast, very hard. And I think 150 is easily within reach. Everything can come to a brutal end, of course, but I don't think we are far from there. Looking at any crypto trend, they have a very, very solid basis. It should be a major shift of something causing crypto to move fast downwards. For all these meme coins, etc., as I said, a small portion is maybe what you want to have, like a lottery ticket. I have a few small portions and in my lottery ticket, some of them doing very well, some not so well, but in general, stay in the bigger coins is my advice. Some of these will be future, they are already future payment ways, but they will be more important as we see things change according to dollar, for instance, the power of dollar, few things, everything argues why there still is plenty of upside in crypto. And you may wonder, so what went very bad? Well, my investments into Servomed took a brutal hit last week when they published not significant results on their trial stage products, causing a 90% fall. I lost 90% of my somewhat not big stake, but big enough stake in Servomed, because I wanted to be, and I am in several biotech companies, and this is the huge risk of being in biotech companies. And what a boomer it was to wake up to see that heavy loss in Servomed. It will take some time to recoup from that. So that was absolutely the worst investment of the year. Actually, I've been in Servomed much longer. I have some gains from before, but now I wiped up all possible gains ever had made in Servomed and the companies that was merged into Servomed earlier. So that was a bad choice. And sitting wondering, should I go into Tesla or should I go into NIO? We are some 1.5 months back, $1,000 challenge. I am personally invested into EV outside the $1,000 challenge, and I wanted to be into EV. The choice was between Tesla and NIO, and looking back at what has happened since, of course I should have went in Tesla. Look at how nicely Tesla done. I told you so in the podcast. I think Tesla will do very good, but I think NIO can move faster. So wrong I was. The tariff talks, all of this hold a push on NIO, while Tesla just continued upwards and upwards. So I will put these two as some of the worst things for last year. In general, the year was very good. I made somewhat okay decisions where to be, why to be, and that is why I in this podcast have been stressing, think about long-term trends, because you might not do the very best stock pick, but if you picked somewhat the right trend, it's a higher chance that being correct, and especially when things go wrong, reduce your losses. And you heard me saying use stop loss, and you ask yourself, so why could you lose 90% on Servomed if you have stop loss? Yes, I have stop loss. Well, Servomed released the news after closure before opening, and the stock just opened way below the stop loss, and then stop loss doesn't matter at all. That is how stop loss works. You cannot set it if stock starts trading below. It doesn't help. So that is the reason why that went so bust. Should I have stayed more up to date and reduced my risk a little bit? Yes, I should have. So there you have it. Despite doing a lot of trades, I sometimes do bad mistakes, and Servomed cost me 90% of the value in the invested Servomed. So 90% of the value of my Servomed stocks are gone. Do we talk money? We talk some money. You could have bought a few nice things for this money. We are at the $1,000 challenge. We are at the end of 2024, the last podcast I will give you this year. I hope that some of you have enjoyed the podcast, that you have made some money, learned some new things, done a little bit better. That's all I'm asking for, that you are doing a little bit better investment decisions. That of course, I hope that your portfolio is greener than it was in the beginning of the year. That's my aim goal. Try to teach you something, just to give you a slight more tools in your toolbox, especially for making good decisions. I will change again the podcast series to focus more on general stock tips, because I know that is what people want. But do remember this one thing: you should make the decision, not me, not someone else. You shouldn't follow advices blindly, because anything has to fit your strategy, your portfolio, your personality. It's very hard to be in a stock if you have a very sensitive personality, where you cannot sit and why go into a stock which will move a lot if you cannot handle the stress. It's not good for you. You are going to make decisions. You buy Baidu, which I just said is giving buy signals in the medium to long term range, but Baidu will move a lot up and down. It doesn't fit your personality. If you are on the lower end of risk taking, then you should go in companies with much less movements, much less volatility, because you will make better decision. Because one thing is buying, the other thing is selling. When to sell? Will you sit and wait for me to tell you when to sell Baidu? You will have FOMO, first out, or fear of missing out, can make you stay in too long. So do not listen all times to what analyst says. It's just tips. Take the tips, analyze them, see if they fit your portfolio. Why would you buy if you only can afford $400? Why would you go into a stock which only is expected to move 2%? You will never gain any terrain if it's 2% over a year. If it's 2% during a week, yes, you can do accumulation, but how much do you pay in fees for buying and selling? You have to check this as well. Some fees are hidden. They give you so-called pips. The buys will be just above what is the actual price. If you use some of these, I would call them rather shady brokers. Use proper broker, but if you use a broker like IBKR, Interactive Brokers that is, or Etor or something, they also have fees. So you have to somehow find a way where you can work with the capital that you have. If you have enough capital, of course, $7 do not matter when you buy and sell. In commission do not mean a lot. But if these $7 is 3% of your gains or something more, well, and you just expect 4% gain, well, there you go. You have to adapt these things into your strategy, and sometimes it's good just to buy for much longer than trading. be more investor type, and then you have to hit the very good trends. If you hit some of the AI trends, well, you know what I am talking about. I will stay in the $1,000 challenge. Will have different balance at the end of the year, but I will stay in NEO. NEO did not have a good Monday. Was very good. Stock moved very fast up to above, I think it was 520, was on some 15-16% up streak, but during the week it just fell back, ending lower than the week before, currently sitting at $4.51. The $1,000 challenge is valued at $2,579. I will leave you with that number. It will change over the next few days, and that new year it will have a something, but I will stay in NEO. I told you I do the risky trade. So you can just follow. NEO is at 451 now. Will it be better off as we move into the last few weeks of Christmas? Hard to say. I will give an update when I will get back after New Year. 30 minutes, a little longer than I expected to do, but maybe it was because I knew it would be the final podcast before Christmas. All that remains is to wish you the best holiday possible. I hope that you will meet friends. I hope that you will meet family if you are lucky to have family and good family. I hope that you will meet your family. If not, meet some good friends. And should you be on the end where there is not so many to connect to, go to a cafeteria, have a cup of coffee, open up to a stranger. Maybe it will be the best day for you for 2024. Until next time, just have a perfect holiday. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.